talking
Juan,
so much shit. I love this shit.
have you
Hey,
have you
put me in
sold
the
a
game,
stock
coach.
yet?
Are
Put me
y'all
in the game,
watching?
coach. Shut up, shut up.
Juan, have you sold a stock yet?
Nah.
Apple? I don't know. Apple is kind of,
In this video, I'm
but
going to
my
show you
research, bro,
exactly how
it's
I
like
would start
Apple's
my
was
day
like kind
trading
of
career over again
like
if
up
I
and
had to
down
start
pretty
from
much,
scratch.
bro.
And before getting to a point of developing an entire
With
process,
Apple
I'm
though.
setting my trading up to be able to scale to 3, sometimes.
All right. Are y'all ready?
Apple's up right now though.
Are y'all ready
For what?
to watch the video?
Damn. Apple stock was going down like crazy a couple days.
I realistically wasted years of my 20s with thousands of hours of being confused and also thousands of dollars.
Damn, Apple's old, bro.
Had I have known the information in the foundation that I'm going to share with you in this video. So I'm going to start with foundational information. So a simple way of looking at trading to start with the basics. Then I'm going to show you the websites and the tools that you're
Now the run Apple had from 2018 to 2020 was
talk about trading psychology, which is probably the most important thing that will either make or break your trading. A simple way to understand trading
Microsoft can damn near get it too.
Beginning, as well as a complete crash course of the most important
And
tools
Google.
that I know about technical analysis. Then I'm going to show you how to build and test your own strategies. Then at the end, I'm going to show you how we can take everything that we've learned, and we're going to apply them into a real life scenario to show you working them in real time. So by the time you make it through this entire video,
damn.
clear cut, simple.
How to sell stocks? How to sell stocks on Cash App? Go to the money tab.
Bro, Jacob,
Stocks.
shut the fuck up.
Select which stocks you're trying to
Jacob, shut
sell.
up. Jacob, shut up. I'm trying to watch the video. Shut the fuck up.
Yo.
Shut up.
I'm trying to find my Muha. Like I'm
Alright,
really
bro,
tuned
I'm
into
ready,
this
bro.
shit, bro.
Hold on. Yep. I can't even hit my shit on YouTube because I can't edit that out. I don't know how them niggas get. Be on that weird shit. They gonna send that shit to my mom.
Set it off cam. Just set it off cam.
Yep.
What?
Y'all know it. Hey, on everything I love.
Be like.
Bro, pause it real quick.
Hey, I'll pause the
real quick.
video for you. Yeah, I'll be back.
Brother, on everything I love, gang, I done definitely did that shit mid-video before. Like, I swear, like, I look to the left and I just hit that bitch. I'm like, blowing it all
You ain't
out.
edited it?
Nah, hell no. It's probably been the time I done hit my shit right before the video started. Hey, I'm finna start
You
hitting
said
my
niggas
shit.
be showing your mom, bro.
No,
Let me know when you
I'm
ready.
saying that's what niggas would do though. That's weird.
Damn, that's actually great.
Yeah, that's weird. Niggas be weird. And shit. I don't fuck with that shit.
Your
I'ma
mom
start-
not even gonna tell you who showed you, bro.
Yeah, and I'm
showed her.
I'm finna start the videos off like DJ Ghost. Next up, we got.
Like,
I swear to God, that's how that nigga be every video.
it's you.
Y'all seen my flight break with the Chrome, bro. I know y'all.
Are you ready, bro?
Yeah, come on. I'm trying to learn how to make some money. I ain't watching 27 fucking what the fuck? I'm not watching this.
This is done in all
You're
sorts of
crazy.
different
I'm
ways.
watching
It's
it.
22 minutes long, brother. I might go to
But
sleep.
the general premise
Or some
is
shit
the
might
market
happen.
is adjusting to fill imbalances which are caused by supply and demand. So how this works is like this. Let's take right here for example. In this part of the chart, when price is moving up, that means that there is demand from buyers and supply
Okay,
from
look.
sellers. If the demand
Pause.
outweighs the supply, the market.
So, what is arrow number 3 doing?
Pointing at the sellers that like the supply.
Okay, I was making sure. Alright, resume, nigga.
Is going to move up until there's another point where supply starts to outweigh the demand, and the market will correct until once again there's more demand than supply, and that will sort of bounce back and forth, which is going to produce something called volatility. Now,
Gang, I
volatility
can't
is
watch this.
basically anytime there are drastic big
He
moves
writing
in the
graphs
market,
and
which
shit.
are
Hold
going to open
on.
up trading
Let me
opportunities
listen.
for us later. So simply put, as traders, our job is to find areas of the market where we can enter at a certain price, have the price increase to another price, then however many of these we bought times the increase is going to give us our profit. So if we bought 100 of these units at $200 and it increases to 205, that's $5 in profit per 100, which is going to give us $500 in profit. But let's take another layer deeper to start understanding where these intraday opportunities come from. So let's take a 1-year starting point as an example. Over the course of a year, this is the general stock market. We can see anywhere from 10, 15, 20, even 30% gains in an individual year. That means that if we were to buy $100 worth of SPX at this point and price increases, we now have $130, and technically our total risk implication is if everything were to melt down and technically go to zero, we're technically risking $100. This is the concept of investing. Now, you're only going to get, say, 10, 20, 30% in a good year, but usually right around 10%. So effectively, we'd have to wait an entire year to get between 10 and 30%, which is good if you're dealing with a lot of money. But if you're trying to scale a small amount and make an income off of it, you need to have a tremendous amount of capital. Otherwise, you have to find other opportunities in the market. Now, what happens if we zoom into just this one small area, where now instead of looking at an entire year's worth of movement, we're now looking at individual days worth of movement. So we'll take today, for example. Now, even in a single day, we had this amount of movement to the upside and this amount of movement on the downside. So instead of waiting an entire year, if we were able to enter here and sell somewhere up here and now still risking $100, just with this single move, we would make $341. This would happen in the matter of 1 hour. We can have multiple of these opportunities in a single day, which allows us to go from making, say, $30 in a year to be able to take that same amount of risk and be able to make $600, $700, $800 in a single day, risking $100. Okay, but as the numbers get smaller and we're dealing on a zoomed in 1 day view, the math and the strategy behind this starts to get a lot more complicated, and it gets more important to know how to do this to properly calculate your risk. Not only that, but we need to know where we're buying and selling and the likelihood of that happening. So just as an example, if you're new, you're especially not going to understand exactly how this works, but this is a trade that took about 2 hours, where I was basically able to pick an area where I expected for the price to significantly drop, enter in, actually be able to make profit from the market going down, which even a lot of people don't understand that you can do, especially good when markets are going down to know how to do this skill. And you can see I
this
followed
nigga
this
just
down
said
for
some
hours.
shit. How this nigga make money from the stock market going down? Gang, that don't make sense, because if you
When you invest while it's going down, when it rises, you earn more. That's what I be
Know
doing.
how to do this to
nigga, you have one stock
calculate
investment.
risk.
Shut
Not
your
only
lame
that,
ass up.
Nah, but I heard about this shit before. Like,
we need to know where we're buying and selling and the likelihood of that happening. So just as an example, if you're new, you're especially not going to understand exactly how this works, but this is a trade that took about 2 hours, where I was basically able to pick an area where I expected for the price to significantly drop, enter in, actually be able to make profit from the market going down, which even a lot of people don't understand that you can do, especially good when markets are moving down to know how to do this skill. And you can see I followed this down for hours, going up $2,400, $2,600, $3,000, nearly $4,000 before taking the trade off.
this is gonna be us, bro. This is gonna be us.
I'm not
bro.
gonna lie, nigga. I'm gonna have to watch the video when I upload the video, because this
More
shit not
important,
These
getting
like
watched.
4,000, bro.
properly calculate your risk. Not only that, but we need to know where we're buying and selling and the likelihood of that happening. So just as an example, if you're new, you're especially not going to understand exactly how this works, but this is a trade that took about 2 hours, where I was basically able to pick an area where I expected for the price to significantly drop, enter in, actually be able to make profit from the market going down, which even a lot of people don't understand that you can do, especially good when markets are moving down to know how to do this skill. And you can see I followed this down for hours, going up $2,400, $2,600, $3,000, nearly $4,000 before taking the trade off for full profit. And that was only risking $500 that I was able to make over $3,000.
So you put profit
Again, this isn't to brag, it's just to show you that if we can use
Awesome,
this
bro.
ideology and framework on a daily basis, these are the opportunities that if you lock in and take it seriously, that are going to be on the table for yourself. But before that, let's talk about all the tools and websites that you're going to need to set this up for yourself and start as a beginner. Okay, so realistically, you're going to need 3 major things. First thing is going to be TradingView, which is where we're going to be doing all of our charting and analysis. That's going to be your home.
I know your ass ain't trying to change your life, nigga.
I'm trying to change my fucking life, bro.
Nigga, who you feeling like, nigga?
I'm feeling like a millionaire.
Base. The second thing that you're going to need is some sort of way to actually place trades. Now, you're going to need some experience before actually doing this. Okay, but considering I trade cryptocurrency, I like to use Blowfin or Bybit. I'll show you how specifically to use those a little bit later into the
That bitch go do. Hey, hurry up, little nigga. Little boy. You got TradingView. You gotta Pin
video.
all them
And if you're
tabs.
looking to trade stocks, a lot of our traders are using Top Step.
Hold on, brother. Did you
.com.
get
The
a
third thing you're going
GeForce
to need-
GTX 65?
GTX 650.
Is that what you got?
Yeah.
Alright.
What do you got?
My shit in the thousands, nigga. I don't know if that's gonna run. I'm gonna keep it.
I'm
P,
finna get
baby.
I'm finna get 1060 tomorrow.
Okay, you do that.
What do you got?
I don't know. I don't know what I got. Keep pushing that little bitch. What the fuck?
Wait, didn't you get a graphics card off of your brother?
Hell no. I gave
Wait,
one
what'd
to
you
my-
get off of your brother?
The mic, nigga? No, the mic stand, and I bought the mic. He gave me a mic, but that shit was so ass. I threw that bitch away immediately.
Alright.
Yeah. Bitch,
Is a trade
resume,
journal,
bro.
which I'm going to provide to you, but more on that later. Once you make your
Resume, little pussy.
You're gonna need some experience before actually doing this. Okay, but considering I trade cryptocurrency, I like to use Blowfin or Bybit. I'll show you how specifically to use those a little bit later into the video. Okay, and if you're looking to trade stocks, a lot of our traders are using Top Step.
Imagine the whole time we watching the video, we really just fucking up our lives because we gonna make all the wrong investments and never gain no money from the shit and always be down. That's gonna be crazy.
That's not even a my head because I go in with completion every time.
Oh, okay, nigga. So we executing.
We executing every time, no matter what.
All right, bet. Send me the sites, nigga. Hold on. When am I looking up Top Steps? Ooh, I don't know what's on my search history. Nah, never mind. This
What do you want to do? You want to do crypto or
I be having
stocks?
some illegal shit in there. Indiana.
Somebody told me
Everything
stocks.
you're going to need is a trade
Jacob, what you
journal,
thought
which I'm
I-
gonna provide
Nah,
to
I
you,
ain't no
but more on
freak,
that
nigga.
later. Once you make your way into TradingView, you're gonna have a screen that looks something like this.
Hold on.
You're
What is it
gonna
called?
wanna
What
do
is it called? What is it called?
Trading View.
Trading View. Damn, this is social media network. These niggas is
click
nice.
on products here and click on Superchart.
Products.
That's going to bring you to a plain chart like this. Now,
Supercharge. Oh my
Yeah.
gosh, what the fuck is this?
Oh yeah, I already feel rich.
I ain't gonna
I
lie.
feel 10 times richer.
I feel you, brother. I feel like I just made some money. This shit looks so advanced, my nigga.
when it comes to style and really setting,
We gonna learn what
I
this
can
shit
go
mean,
through
bro.
that. I'll bookmark
And
at
then
the
once
end
we
of this
do,
video,
brother,
so you can watch
we
that
gonna
after and get
understand and we
fully set
gonna
up. What I
just
like
be
to
able
do
to
when
look
I'm
at these
trading is take
motherfuckers
my
and be like,
trading view,
hey,
put it on one side of my
we
screen,
did
I'll take my
this
trading
shit,
platform
nigga.
where I can input my orders, and I'll put it
nigga.
on the other side. So now
I
wanna
will
show
say
you some
Apple is on
fundamental trading
a
information
steep
so you
rise. They
understand
just
the
came from the
approach you
bottom
take
of the
with
bottom.
trading. So anytime you're placing a trade,
Yeah.
you basically select
Their shit
what's
finna
called
go up.
Nigga, yeah,
pair.
they're
Now, a
they're
pair
definitely
is
finna
going
jump
to
the
be
fuck
any
up.
sort of asset that you're either buying or selling against the value of the U.S. dollar. Okay, so this
Am I
is
mudded?
Solana
Can
versus
you hear me?
Yeah.
I'm tripping.
Yeah, see, Apple is going up. I think this is Apple right here.
Tesla, let me see
They're
Tesla.
going
Tesla going up crazy. Yeah, them niggas was down for the first fucking 20 years though. I ain't gonna lie. Nah, damn, my phone heavy as hell. Alright, bruh. Nigga, resume the video game. What you going, fuck?
the U.S.
Oh.
dollar, which U.S. dollar is going to maintain mark at the end
I'm
of this
talking
video,
about
so you can
in
watch
it.
that after and get fully set up. But
What?
what I like to do when I'm trading is take my trading view, put it on one side of my screen, I'll take my trading platform where I can input my orders, and I'll put it on the other side. So now I want to share with you some fundamental trading information so you fully understand the approach you take with trading. So anytime you're placing a trade, you're basically selecting what's called a pair. Now a pair is going to be any sort of asset that you're either buying or selling against the value of the US dollar. Okay, so this is Solana versus the US dollar, which US dollar is going going to maintain a pretty consistent value, and Solana will either go up or down against that value, which is going to create price movement. The way we manage our pairs is using something called watch list, which is over here on TradingView. Okay, so for example, if you're creating a new watch list, we can click this plus button here, and if we want to go to cryptocurrencies, we can click on Bitcoin, XRP, Sol. We can start selecting different cryptocurrency pairs to have in a list here, which will allow us to flip between and to have access to viewing how these individual charts are moving. So when I'm looking at a chart here, you'll see we started off with a line chart. So it's basically a line showing how the price is moving. And then I can switch between something called candles. So candles are a better way of getting information as a day trader. Okay, so the way candles work, okay, considering this is a green candle, that means that price started here, went as high as this point, as low as this point, and ended up closing right here. And that's why our candle is green. That's the body of the candle. So we had the total movement up and the highs and lows. Same is true for a red candle, only the open happened here. The close was lower than the open, and the highs and lows remain the same, giving us a red body. If we go back over to our chart here, right, I have black and white, so it's a little bit different. Still looking at a similar example. Here we had the candle open, we had the candle close, the highs and the lows, and then say for example this candle opened here, closed here, and the high and lows were here. Okay, and these candles are going to show us different information depending on the chart frequency that we choose. So for example, we have up in our top menu here chart frequencies between anywhere from 15 seconds to 1 full week. So you'll notice I have two side-by-side charts of Ethereum. On this side we have 5-minute Ethereum chart, and over here we have a 1-day Ethereum chart. This green box is the same green box on both sides, only this is one candle showing us the open price, the close price, and the highs and lows. And if we notice over here, this is the high, the low, and this was the total movement over the day, but in 5-minute increments opposed to a 1-day increment. And there's different combinations that we can use, but the lower you go down into the time frame, each candle is going to show you, in this case, 5 minutes worth of movement opposed to a whole entire day of movement. Okay, so now let's get into a section talking about trading psychology. This is the most important part that will either make or break any progress that you make throughout this process. Okay, this is what will keep people caught in a cycle of never getting better, or will allow people to sort of skate through trading and get better really, really quickly. Okay, so I've identified 3 major things that you need to retrain your mind around, and I'm gonna explain to you exactly how and why this works, so that once you get through this section of the video, you're gonna have an aha moment, and it's gonna clear you up to be able to proceed and learn and get started with trading the right way. So I've boiled it down to these 3 main points. Okay, and the first thing that you need to retrain your mind out of is that losing is inherently bad. We're human beings, and anytime you lose at something, this is viewed as you're not sufficient, you're not doing a good job, or something needs to be changed to make you be able to perform better. This does not apply to trading, and you really need to understand that, as weird as that concept sounds, and you're going to understand why in a second. The next thing is being wrong is bad. This kind of ties into losing. Being wrong and losing money we view as human beings. There needs to be a corrective action to fix that behavior. In trading, this is not the case at all. You actually need to completely flip this on its head. The third thing is the misconception that making money on a trade makes it a good trade. This is not the case whatsoever. So let's look at this example.
Nigga just told me a whole bunch of shit. I think I know.
Losing's bad, being wrong is bad, and why making money, no matter how, is good. Okay, so think of it this way. Anytime we're buying into the market, one of 2 things is going to happen. It's either going to move up and we're going to make money, or it's going to move down and we're going to lose money. How we actually go about that as traders is what is going to dictate whether we're successful or not. So let's look at it this way. Anytime we're entering the market, we need to, number 1, figure out how much we're trying to risk, whether it's a percentage or whether it's a dollar amount. Say we want to risk $100, for example. That means that if we enter right here, we need to make sure that if price moves down to this level, that we're only risking $100. And in doing that, we can ensure that if this moves up 3x more, now we know exactly how much we're expected to win and how much we're expected to lose. So let's take that same exact example. We have our 1 unit of risk, which we know is $100, for 3x positive units of risk if we're right. So let's say, for example, whatever we're buying is valued at $153.52, and we want to risk exactly $100 on this trade. That would mean that we'd pull up our calculator. I'm going to show you a really cool, simple way to do this afterwards, but I want you to understand the math of how we're actually going to be calculating risk, right? If we want to position an entry in the market, we're going to take our entry value at 152, okay, and say our stop loss level, or this level where we're going to get out for a contained loss, is at 150.52. So we're going to subtract by the stop loss value, and that's going to give us 3. Now we're going to take the dollar amount that we want to risk and divide by 3, and that's going to give us 33.33 units to effectively effectively buy in at to ensure that if this moves against us, we're containing the risk to $100 and we know exactly what to expect if the trade moves in our direction. So anytime we're looking to enter into a trade, we're already positioning ourselves to accept the fact that we can be wrong and we can lose. And in order to actually get into the market and open ourselves up for the potential of making money, we have
Okay.
to
Replay this whole thing.
$153.52, and we want to risk it here. We need to make sure that if price moves down to this level, that we're only risking $100. And in doing that, we can ensure that if this moves up 3x more, now we know exactly how much we're expected to win and how much we're expected to lose. So let's take that same exact example. We have our 1 unit of risk, which we know is $100, or 3x positive units of risk if we're right. So let's say,
If I'm not mistaken, we definitely just watched this part of the video.
I know, but I'm saying I'm rewatching because I want to see. Like, I'm trying to learn.
Bro, you didn't get the gist from the first fucking time, bro. The nigga said,
I'm trying to understand it better.
gang, just play the fucking video, bro. You on that weird shit, man. I told y'all, Che, it's always one.
You sound like dude from The Wire.
Sound like one, bro. It's always one.
Simple way to do this afterwards, but I want you to understand the math.
If I lose on the game, it's one fault.
Calculating risk, right? If we want to position an entry in the market, we're gonna take our entry value at 152. Okay, and say our stop loss level, or this level where we're going to get out for a contained loss, is at 150.52. So we're gonna subtract by the stop loss value, and that's going to give us 3. Now we're going to take the dollar amount that we want to risk and divide by 3, and that's going to give us 33.33 units to effectively buy in at to ensure that if this moves against us, we're containing the risk to $100 and we know exactly what to expect if the trade moves in our direction. So anytime we're looking to enter into a trade, we're already positioning ourselves to accept the fact that we can be wrong and we can lose. And in order to actually get into the market and open ourselves up for the potential of making money, we have to accept that we could potentially be wrong. In that sort of same mind process, a lot of people think they need to be right all the time to actually make money in trading, which is 100% not true. So let's take this for an example. Say we take a total of 10 trades. We've contained our risk so that every time we're losing a trade, we're losing -1 unit of risk. So we have 1, 2, 3, 4, 5, 6, 7 losses and 3 wins. But when we're making these wins, we make 5.2 times what we're risking, 2.5 what we're risking, and 3.1 what we're risking, which is going to give us a sum of 10.8. And on the loss side, it's going to give us a sum of -7. We lost 70% of the time, winning 30% of the time, which is going to give us a net total of plus 3.8 risk factors. So once again, we're risking $100, which is going to leave us with a profit of $380, being wrong 70% of the time. If you want a really easy way to do this position sizing automatically on chart, you can click into indicators, you can search up IT position calculator. This is a calculator that we made on the private side of our trading team. I'm giving it to you guys for absolutely free. You can click onto this, and then basically you can click right here at your entry where you want to take profit and where you want to set your risk to. Then you can actually input your dollar amount risk. Say I want to risk $100, hit apply, and that's going to show you the exact quantity that you need to enter in at that exact amount to risk $100.
That's not crazy. We need to get that shit right now.
What is it?
It's like,
on the private side of our trading team. I'm giving it to you guys for absolutely free. You can click onto this, and then basically you can click right here at your entry where you want to take profit and where you want to set your risk to. Then you can actually input your dollar amount risk. Say I want to risk $100, hit apply, and that's going to show you the exact quantity that you need to enter in at that exact amount to risk $100 if the price is to move against you. So if we go through our trading thinking that losing is bad and being wrong is bad, we're never going to put ourselves in market situations where we can actually allow ourselves to be right. The losses that you take are simply opportunity costs to be able to get into the market. Understanding that making money does not make a trade good or bad. It's about following the specific process that you know is going to be repeatable while keeping your risk contained. If you're just going into stuff and putting a bunch of money into it and you're not quantifying your risk, you don't know if it's going to work over time or not by studying it, and you make a bunch of money, you're one decision away from losing every single thing, even if on an individual trade you get lucky and end up making a bunch of money. It's about following the process, making sure that you understand that this is the mental psychology in trading math graph that's going to put you in a position to approach the markets properly. And understanding that trading has nothing to do with being right or wrong, it has everything to do with understanding how much you're making when you're right versus wrong, and the percentage of time that you are right to be able to determine whether you're going to be profitable or not profitable. This is all going to be based around keeping your risk uniform, knowing how much you make when you're right versus when you're wrong, having your average loss and your average win, and the percentage of the times those are happening, to once again be able to look at this table and figure out if you're not profitable or if you're profitable. Okay, so now that I've showed you the general structure, the framework of building positions, and understanding how and why we're controlling risk, let's go back to TradingView and understand how we're actually going to approach the market on a technical analysis standpoint. Now, this is where there's millions of things to focus on. I've boiled them down to about 5 or 6 major things that I look for to find key areas in the market. And I'm basically going to give you a crash course on this. I have a really good technical analysis guide if you want to dive into more detail after this video, which I'm going to put in a card at the end so you can dive a little bit more into that. Okay, so let's pull up a 5-minute chart so that each candle is 5 minutes worth of price data. And let's start taking a look at how I would read this chart. Okay, so the first thing that I'm always starting with is identifying what are called trends on charts. And trends are basically areas in the market where price is generally moving in a specific direction. So if it's generally moving up, that's going to be an uptrend. And if it's generally moving down, that's going to be a downtrend. Okay, and the way that I can really determine whether we're in an uptrend or a downtrend is by clicking on this tool right here and starting to find areas on the chart where price seems to be bouncing off of an invisible level. Once again, going back to that supply and demand area. So if I see these critical areas and I draw from that low to that low where the price is sort of responding off of, okay, anytime the price is maintaining above this specific area, that's maintaining the status of an uptrend. And you'll notice this point, price finally pushed below this trend, pushed up and continued to go lower, which is now making this as a downtrend. So we have an uptrend over here and a downtrend over here. So I can draw another trend level off of there. Okay, and one thing that I really like to take note of is if we have an area where price is continually making these levels, breaks underneath it, and then comes up and retests it, oftentimes this is a beautiful key level to get big moves down once the trend does change direction. So trends are basically showing us areas where price is likely to come down to and have a continuation, and then once it does finally break, where it's likely to bounce off of and continue moving lower, which we can start to use to start to craft some of these positions where we're entering in expecting for price to move significantly in one area and not come through to the other. Okay, considering this is a visual representation of mass human psychology, there's another tool that is really useful in trading called a Fibonacci retracement. This is one of my go-to indicators. So this is how a Fibonacci works. Say you have a chart moving up where you have a trend in a certain direction. You can click on this Fibonacci retracement, click at the beginning of a trend and go all the way up to the highest point on the trend. And what you're going to see are these numerical values. Okay, starting from 1 to 0, we have 78.6, 61.8, which is in green, 50, 38.2, and 23.6. And what you'll notice is oftentimes if a trend is going to have a pull down, this 50 level is often the level it will go to and have a continuation higher. Same thing with this 61.8. This is referred to as the golden ratio. This is the ratio that can be found naturally occurring in the formation of shells, plants, trees, even your facial symmetry, all for some reason fall around this specific Fibonacci value, which oftentimes will lead the price to revert cleanly down to that level and have a continuation move up, which once again can allow us to start to structure positions around these key levels. Okay, so if we go back to our chart, we know we have an uptrend and a downtrend. So say for example, we wanted to look at this trend and see some of its important levels. We'd click at the high and then go over to the low. And then let's watch what happens to price and where it starts to respond. Okay, so as the chart moves forward, that becomes the low. Okay, price comes up, reacts cleanly off of that 61.8 value. And it just so happens that that level was the last level for a massive move to the downside. Even looking at this area right here, say we were to start from this point to there, this push down before a continuation higher was basically the last level that the price regressed down to before making a continuation up. Okay, another really cool piece of technical analysis that I like to use when I'm looking at these formations is something called a fair value gap. And you can see these all over the chart. So it's basically these big candles that are making these big pushes like here and like here, or like here and like here. And I can actually turn an indicator on called the Lux Algo Fair Value Gap indicator, and that's going to pull them up on my chart automatically. But the reason that I look for them is because you can see oftentimes price will end up coming back into these and making big moves back in. Fair value gap right in here, price moves up, has a response off of it. Fair value gap produced here, price pulls back down, even though it wicked through this one like crazy, comes back down to the middle of that, has has a continuation up. Okay, this one's not showing, but here price comes into the midpoint, has a continuation up. Okay, and the way that we can identify these on a chart is basically we need 1, 2, 3 candles either in the up direction or the down direction where the first wick and the third wick do not overlap on the second candle. So you'll see this is the high of the first candle and this is the low of the third candle. In between here is going to be a bullish fair value gap. And right here we have 1, 2, 3 candles, first wick, third wick, price doesn't overlap right here, creating a bearish or a fair value gap that is likely to continue moving to the downside. It's things like these that I'm using when I'm doing analysis to be able to find key areas that even though we don't know for sure it's going to move in our direction, that we're able to at least start off in an area where we can keep our risk contained, let the market move in our direction, and hopefully make more money than we're risking. Okay, and of course this is just scratching the surface. I talk about all of this on my channel a lot more, but as far as a foundation, these are the primary things that I'm using. Like I said, you can watch the technical analysis video at the end of this video to dive more deeply into how I use these things specifically. Okay, so now that we understand some of the analysis and tools that go into actually trading, let's talk about how to actually put this into a strategy that you can start practicing and trading for yourself. So this is the progression that we're using anytime we're building a trading strategy. The first thing is the concept, which is coming from observation. So just like we were noticing on our other chart that certain things were happening based on certain pieces of analysis, what we want to do is gather a bunch of those ideas and observe a general tendency in the market. Okay, the next thing that you want to do is create a rule set based on your observations. And then the next thing that you want to do is evaluate that outcome by identifying the percent of the time that it happens, the average amount that you make versus how much you lose, while considering the specific loss size. Okay, and then basically it's up to us to be able to see whether it's going to be profitable or not. Okay, so let's just use a really simple example of how you can actually go through and test your strategy. Once you have an idea, you can click on this button on your chart, which is called bar replay, and you can click back to a random part on your chart and then click this play button, and it's actually going to play the chart forward, allowing you to see how your idea would work in real time. So what I'm noticing on this chart is every time we have this indicator, which is a custom indicator called the InevitTrade Pro Plus indicator, it's actually in a tool suite. If you follow me on Instagram in the description, you can add it to your chart. Basically shows you when the markets are perceived to be undervalued or overvalued, and when they're undervalued, it will give you this red highlight strip here. So let's say, for example, every time a red strip is produced, I'm going to enter in, I'm going to sell when it produces a green strip, and I'm going to put my risk underneath that recent low, and I'm going to risk $100 every time. That means that I can calculate a loss as -1R and a win is however much more I'm making than I'm risking. So in this case, it would be like 3.94. So then I can just go ahead and play my chart forward and set this strategy up to work. Okay, so we have a highlight strip here, setting up my position. Okay, so we have a sell right here. So we would sell our position. We would make plus 6.2R. We would sell in here. Okay, we have a red highlight strip. So we sell. That's plus 3 risk factors. Okay, so we would buy in here. Price comes down, goes through our stop loss. So that's -1R. Okay, so you can basically do this over a large period of time. Now all you have to do is add up the total amount of trades. Basically go into a trade tracker. This is a trade tracker that are in the tools that I'll send you if you follow me on Instagram and DM me the word tools. And you can click each trade. Say it's on Sol, 15-minute. You can put long or short. You can put whether it's a win or a loss. So in this case, we had 2 wins and 1 loss. P&L on the first was 620. P&L on the second was 300. And then we had a $100 loss. So that's going to show us our winning percentage. We can click on this sum here and we can go over and hit average. And that's going to show us our average profit per trade as well as our average winning percentage, which we can take into our system, which based on our average 273 would put us somewhere between these two amounts at a 66% win rate, would put us well into the profitable zone. Now, obviously this is only 3 trades, so you'd want to do this over an extended amount of time. But once you have that, you've effectively found a concept, identified rules, found out your data, made sure that it's confirmed to be profitable. This is where you can actually start to test this strategy in full time. Okay, so we just talked about doing on chart bar replay. The next would be using a simulated account. Okay, and then after that, you'd actually apply this onto a real account. Okay, so let's say, for example, you wanted to actually enter into this trade position. Since we're trading cryptocurrency, I'm going to go onto an exchange like Blowfin. I'm going to pull up Solana. And you'll see over here, we have limit and market. If you want to choose a specific price, you click on limit. If you just want to get in or out of the market quickly, you're going to click on market. So we're going to stick with limits for now. Okay, if I went into every single detail about this, this video would be like 8 hours long. Okay, since this is where the price is, first thing that we need to do is figure out how much we need to enter in to risk, say, for example, $100. So we're going to click on our entry, take profit, stop loss, enter $100. That's going to give us 56 as a quantity. And this is where leverage or using prop firms is going to be important, because that would mean that effectively we would have to buy at 121.73 times 56.18 SOL, which is going to cost us $6,800. Unless you have $6,800 $100 in an account, you're not going to be able to take this kind of size. And that's exactly why we're going to use something called leverage, which, for example, if we use 10x leverage, would take $6,800 and only require us to use $683. Okay, so we would enter in 121.74 as our entry. We would go into our amount. We'd have 56.18. I would check this take profit and stop loss. Our take profit's at 130.76, which gives us our estimated profit level, and our stop loss at 120.8, which you can see is going to give us exactly $100 worth of risk by entering specifically at this amount. So we know if we lose, we're losing 100, and if we're profitable, we're making $460 on this strategy. Now you can see right here it says the cost, which is $6,800. If we increase the leverage up to, say for example, 10, now once again that cost comes down to $688. And that's how you can start with a smaller amount of money and still be able to have the upside if you know your strategy and your process works and you're looking at it inside this framework. Okay, so now that we're at this point, we've developed all these skills and understanding of trading. I'm going to take you through a strategy that I like to trade on the channel, that we trade a ton on the private side of our trading team. We have team members absolutely crushing it. Me personally, when I'm trading these sessions, a lot of times, my last session even, I made $7,500 in about 4 or 5 trades, risking $500. I'm going to show you what I look for on a setup and how I apply all of this logic to get into positions and how effective it is. And I'm going to show you a few entry models that I like to follow. Okay, first thing that I'm going to turn on is this buy and sell indicator. The second thing that I'm going to turn on are those fair value gap indicators. So in this strategy, I can't share every single thing that I'm looking at without being unfair to the private side of the team, but I will show you something you can get started with and apply a lot of your own logic to that will still get you in a position to be able to make this a profitable operation. This is crazy for me to be sharing on YouTube. What I'm looking for is some sort of sell signal, right? I can't tell you exactly what the signal is. Some sort of indication of an over or undervalued area, somewhere where we have a trend break under here into one of those fair value gaps, in which case I'm looking to enter in the midpoint of this fair value gap, place my stop loss outside, and try to ride the trend down. Okay, so I'm going to go ahead forward and play this to show you what I'm looking for. Okay, so we have overvalued but no signal. Okay, so right here I start to have lows forming. We have an overvalued area right here with price starting to push down. So once again, if I'm targeting the halfway point of this area with an oversell and a trend break, price is starting to come underneath, price comes up, goes into our area, gets into the trade, and then immediately reverses down, already putting us up in this situation something like 12 times the amount that we're risking. Once again, if we were risking $100, our profit would be at $1,200. So even with one of these situations, we could still be wrong 10 other times and still be profitable for the session. Okay, and of course, every trade doesn't look like this. There are definitely losers. This is just scratching the surface of all of the data sets that we run on the private side of our trading team. But if we just want to focus on the basics of it, it's things like these where we can follow these types of models and actually apply them into the market. Okay, so let's take a look at another example of a trade that I entered. You can see I'm entering in here. Price starts to move in my direction. Once again, off of that area, overvalued, starts to make a significant push down. Once again, $4,000, $5,000, $6,000 in profit, risking $500. Then I eventually close this out for about $4,600. You can see here I'm looking to buy in, hoping the market moves up. I enter in here, and just to show you the realities and be transparent, a lot of times you are going to have losing trades too. So for example, okay, this trade closed out and I lost within minutes, but the fact that I can make $4,000 or $5,000 in a good trade and only lose $500, $600 on the losing trades, as long as I'm following the strategy, keeping my position size consistent, this gives me the framework to actually dive into trading and do it properly. Okay, and those are just 2 trading models. We have tons of ways of approaching the market in general. I would definitely recommend for you to watch this video if you want to dive deeper into the technical analysis. If this helped you, especially as a beginner, hit the like button, share it with a friend, subscribe to the channel if you like the content. If you follow me on Instagram and DM me the word tools, I'll send you all the resources. But until next time.
That's the video, y'all. Y'all just got 30 minutes of that. I don't even know. Y'all let me know if that changed your life. My diagram on the great. That shit is a